Here again with Smart System. In our last lesson, we looked at the MACD indicator, an indicator which helps us identify, engage the strength of trends. In today's lesson, we're going to look at 3 specific ways that traders use the MACD indicator to identify potential trading opportunities. So let's get started. Because the MACD indicator is a trending indicator, you're going to want to shy away from using it when the market's in a range, even to try and predict new trends. In addition to being able to tell whether the financial instrument that you're analyzing is in a trend just by simply looking at the chart, you can also get a better indication of whether it's in a trend or not and how strong that trend is by looking at the MACD indicator. If the MACD indicator is close to the 0 line, and that's indication of a range-bound market. So you can see here that the MACD is close to 0. And there you're in a range-bound market conditions. Wherever here chose the right-hand side of the chart, you're trending up away from 0, and that's an indication of a pretty strong trend in the market there. Once you've determined that the market isn't arranged, there's a couple of different ways that you can trade the MACD, which we're going to look at first, something called the MACD divergence. And basically, very simply, this means when the MACD indicator is trading in the opposite direction of the market, that's a signal that the trend that's in place there may be due for reversal. So you can see here that the market is making new highs here, but the MACD is actually trading down, and that's an indication that trend is running out of steam. If it was a downtrend there that we were looking at, and the MACD was trading up, that would be an indication that the downtrend was losing steam. But here we have our uptrend, and we can see here by looking at the MACD that uptrend might be in danger, and you can see the market did sell off. Although it did take a little while, so all the other indicators that we're going to look at, you're going to want to use this in conjunction with some of the things that we've learned so far to confirm your signals there. But you can see that divergence there, and it did call. The market top there just took a little while. The second way is what's known as the MACD crossover. And very simply, when the MACD line crosses above the signal line, this is a bullish sign and trade. Some traders will trade this as a buy signal. And when it crosses below the signal line, then that is a sell signal. And traders will look to go shorter, exit their long positions on that cross. And again, this can be traded by itself, although not recommended. It's recommended trade that if you're going to trade it in line or in conjunction with some other indicators and some other things that we've learned so far. But it can also be used as additional confirmation for other things that you may be trading. So you can see here, great buy signal, caught the very bottom of the trend there, and then great exit there. It caught the very top and got you out there. A good indicator, because it generates a lot of signals. It's also going to generate a lot of bad signals, in addition to the good ones. So you want to have some confirmation there. You can see the market went up there as a result of that. So that's our lesson for today. You should now have a good understanding of the 3 main ways that traders look to trade the MACD indicator. And next lesson, we're going to look at oscillators and start going into some of the other ways that traders can determine strength in the market. So we hope to see you in that lesson. As always, if you have any questions or comments, please leave those in the comment section. Have a great day.